Certainly, people underestimated how much the increase in taxes, payroll, and income, and now the sequester would affect the economy. My view was that that would imply a fiscal drag of at least 1.6, 1.7% this year, and therefore the economy this year is not going to grow much more than 1.6% given this significant fiscal drag. There are some positive, of course, shale gas, recovery of housing, some reshoring of manufacturing, but there is a huge amount of political and policy uncertainty. There is the gridlock in Congress. We're doing the wrong type of fiscal consolidation. It's way too front-loaded, and the significant increase in taxes, especially payroll and income taxes, now having a drag on consumption and on economic growth. So U.S. this year is going to have subpar economic growth, below trend, anemic, and unemployment rate is going to remain high.
Is the Fed helping at all alleviate some of the pressure from the fiscal side?
Well, the Fed is doing quantitative easing, and given the economy is so weak, probably, given the amount of a fiscal drag, the Fed is doing the right thing for the time being. My concern about the Fed is that while this policy is correct right now, another year of quantitative easing, another year after that of keeping zero policy rates until the unemployment rate is 6.5 or lower, and then exiting from zero policy rates very slowly as we did in 2004, 2006, when it took us about 2 years of measured pace, pre-announced every 6 weeks of 25 basis points. That means that we're going to have easy money for the next 3 or 4 years. And there is already frothiness in credit markets. So the real economy requires more QE and low policy rates. But then the frothiness in credit and asset markets could lead to another significant bubble in the U.S. economy. And we could end up making the mistake we did in 2004, 2006, exiting too slowly, creating a huge bubble, and then followed by a bust and a crash. I think that's a big worry down the line. So you'll have a big party in asset prices for the next couple of years, but you could have a big crash, even bigger than before, followed by that.
I have to say that I've been hearing more and more about that idea, the risks of central bank policy, not just in the U.S., but around the world. Are we getting to the point where the risks are starting to outweigh the potential benefits?
Well, it's a dilemma because economic growth is anemic, if not outright recession, like the Eurozone and UK, and even Japan has to be aggressive. So economic condition, high unemployment rate, weak economic growth, outright recession suggest more quantitative easing, more low policy rates, more forward guidance of keeping those rates low for a long time. The BOJ is doing it, the Fed is doing it, the BOE will be doing it, the Swiss National Bank is doing it, and even the ECB. They're going to do cutting rates, credit easing, something down the line, sooner rather than later. And the real economies require that liquidity, but this liquidity is not going into credit growth to the real economy. Consumption and investment is growing now in credit market. It goes into financial leverage, and it goes into frothiness that eventually becomes dangerous.
Here at the IMF spring meetings, there's a big sort of pushback of austerity like we haven't seen before, perhaps some of the Rogar-Reinhardt criticism from the UMass paper. Is there a crumbling case for austerity economics right now?
Well, there is a crumbling case for front-loaded austerity. We're in a world in which until last year, the austerity was concentrated in the periphery of the Eurozone and the UK, but now we have a massive fiscal drag in the United States. We'll have a significant fiscal drag also in the core of the Eurozone because the fiscal compact applies also to Germany and everybody. And the recent IMF studies correctly suggest that when everybody is doing austerity at the same time, then it's synchronized and the fiscal multipliers that are negative on economic activity because raising taxes, reducing disposable income, reducing government spending has a negative effect on economic growth. So the risk that we're facing right now is that the austerity is too front-loaded. Of course, over time, you have to reduce budget deficits in order to make sure that that becomes stable and sustainable.